All righty. All right. And all right. And we are hot. And I don't know. Yesterday was kind of exactly what I expected. No real surprises. I think the biggest surprise of the day was probably Apple, quite honestly, because they slapped this thing, they clubbed this thing up pretty good. And you can see my magic line here on Apple that we did break it, and we were able to kind of get back up over it for a while, but it's broken down now, and now we're going to be looking for support. Now, if I'm a gambling person, I'm looking at support down here. And let me just get rid of this real quick just so you can see what I'm seeing. If I actually expand this, you have this large pack of volume here down around, from about, it looks like about 230 all the way down to where yesterday's lows were 227 or so. Let me get on the hourly. It's just easier. Hourly chart will be easier to see where that low was. And you can see even on the hourly, a big swath of red down there. And the low yesterday was 227.70. So I'm going to go ahead and just set an alert on that, just for like short-term support down there. I kind of like that. And if you're going to get long Apple, it is up a little bit. It is getting a little bit of a bounce today, pre-market. Where is it? I don't know where the bid is. I have to look at the bid. Apple. Bapple, it's up about a buck on the bid. It's up about a buck. So it is getting a bounce. But if I'm going to do a trade here in Bapple, that's where your stop's going to be, 227, right? Have it be like at those lows. Because if we kind of break that, Apple could, it could really realistically drop down below 220. Let's face it. There's a number of spots this can, I don't know where it's going to stop if it does, but, they could really take this thing down to 220. 220 here is back in November. So they could feasibly take this back to 220 pretty easily. Really going to be dependent on the market as a whole. And if you put it in perspective to, yesterday's whole market action, if you really think about it, Apple being down, I think it was down 9 points, really had all the other indexes down because, Apple's a big percentage of all the indexes. So I would be curious if you took Apple out of the equation. Markets were probably had a pretty good day yesterday, I think. So anyway, kind of the fall of the giant there. And then let's look at volatility, because I think volatility definitely got a little bit of a bump in Apple yesterday. I know it was sitting in the 30s, and now it's in the 50s, 54. So it's definitely in the wheelhouse to do something. They do have earnings coming up in a couple of weeks, January 30th on Bapple. Yes. And if I'm going to do anything in here, I'm already looking out. As far as options, I'm already looking out in March. I've kind of, I'm at that kind of point now. Usually when the front month expires, which is January, and those are expiring today. And historically, this is a big expiry because this is, if anyone's not aware, with today at all, is when they first came out with the leaps, the leap options, which are the ones that you see that are like a year, 2 years, 3 years out. They only had Januaries for the longest time. And it's only new now that they're doing leaps like that are beyond the 1 year. Why? Because there's money in it. That's why. So now there's actually more. But for a long time, when they first came out, there was only January. So they tend to have the biggest expiries. And, let's face it, when people are looking out, January seems to be the place where they land when they go out 4 years or 5 years. It's just, it is what it is, right? And so this is a big expiry month for options because of that. So anyway, with that being said, I'm done in February's because usually when the front months expire, I usually on that day that kind of marks me to go out to the next month, unless I'm going to do something like a special situation or a short-term trade. Then I'll do February. So I guess with that being said, I'm already looking at March, and then with this increased volatility, it's not going to show in the March options, unfortunately. Because it's got too much time. This volatility is going to show up in Apple in this increase in February. So I'm looking at a 13-point move in Apple in February. They got earnings on January 30th. What do? Right? They beat this thing to death. We looked at the chart, right? 220 appears to be in my opinion, kind of looks like a good place for support. And so if I looked and let's say I did a 220, like 215, little baby put spread here, I kind of like that trade, especially short term. You're right around the 30 delta here at 29. You're going long about 7 shares in Apple. So it's about 7 shares, almost 8 shares. So it's definitely a bullish trade. You have a 70% probability of profit. You're going to use about $370 worth of buying power, which, is to me, in the wheelhouse for a lot of accounts. You can even do this in an IRA. Right? You could do this in a Roth or whatever because it's completely risk defined. So it's a covered trade. And you're synthetically getting long 7 shares without really betting the farm. And actually buying the stock. So it's a nice cheap way to do a short-term trade. And then if I'm in this for a week and a half, that would be considered long because really what I'm looking for here is one of two things. In the next week, I'm looking for Apple to pretty much not go down or even not go down that much. But what I'm really looking for is a little bit of a collapse, not a collapse, but more of a retraction of volatility before earnings. All right. And then if it works out, maybe I even hold this in. If Apple seems to bounce here and even, has a decent run, back up to say, 235 or even 240. But let's just say conservatively 235, 238. This will come in nicely. I could probably sell this for, 50 cents and be done. That would be kind of the goal here. So that's that one on Apple, and that's the trade I like. You can see here it's a bullish trade. Break even on this is probably around 2.0. I'll call it 2.05-ish. I think what's happening here, let me just do this real quick. I have to get rid of that because that's actually skewing there you go. So to do this one for $1.30 isn't a bad trade. Again, it's small, but, hey, small is good. Now, if you want to get a little more aggressive, just widen the strike. So do a 220, 210. I would try to do this one for 235 because I think you're going to get a little bit of a volatility spike on Apple right in the beginning, in the first 15 minutes of the market today. So you might want to take advantage of that. Again, don't increase the contracts, just widen the strikes. And so by widening that, you're actually going to use about $770 worth of buying power. You're going to bring in twice the credit, 235. And you still have a very high probability trade, probability of profit at 72%. In this case, though, instead of just 7 shares, this one's about 14, so twice the amount of shares. You can see how everything pretty much doubles, right? When you move those strikes as opposed to buying more. And why do we move the strikes and we don't buy more contracts? Commissions, right? Why do we want to give it to the house? So instead of doing 2 of the other trade, the $5 wide, we just do 1 and we widen the strikes. Again, if we wanted to do 3, widen the strikes and just keep widening it until it hits your risk profile. Now, in this case, widening, go from 210 to 205, doesn't really yield me, again, look, here's 210. We're at 700 buying power. We're bringing in 231. So now if we go from 210 to 205, we're up to 1,200 in buying power, and we're only bringing in 282. So we're really not, to me, that's not really feasible to go and risk $1,200. I'm just not getting enough juice down here. I would want this to be closer to $3. And I'm just kind of thinking out loud here. So I wouldn't go 3 wide here. I would go 2 wide. If you want to get more aggressive, stick to the 215, but move the 220 and go to the 225. You can see it's going to increase. It's actually going to reduce your buying power. You're going to bring in more money, but what it's going to do is it's actually going to give you a little bit of a hit on the probability of profit. But if you want to be aggressively long, that's kind of how you do it. So again, with options, it's really important for you to play around with the strike prices and try and find something that fits your risk profile without sacrificing return, right? Because we want those probability of profits to be high. We preferably want them to be over 50% most of the time. We don't want to be taking these, because on the other side of it, look, and you know what? In the last 2 years, and we're kind of entering a phase of the markets where things have I think they've changed. But let's face it, last even 3-4 years since you had people do this. Oh yeah, I'm going to go out in February and I'm just going to go buy the 240 calls. They're ridiculously out of the money. You're really only buying 32 shares, but the market has went up so much that you could do that crap. And then you look like a genius. We're not in that kind of market right now. And we haven't been for quite a while, probably the last 6 to 8 months. You just can't do these trades and have them work out mysteriously. And then, look at this trade. It's only got 28% probability of profit. I mean, so why would I do that? And I have 0 cushion there. So even if I was being frugal, and let's say I just did at the money, the 230, 235, I mean, for the $200, I only got a 46% chance of being right. And it has to go up. I have no cushion at all. There's no cushion here for me. So if I'm wrong, and I'm out 230. Now, the other way, if I sell puts, and specifically the 220, which is actually out of the money, I have a $10 cushion. I got a $10 cushion for this to be right. Hence why my probability of making a profit is much higher here Now, grant you, I'm not making as much money, but I got a better chance of doing something. So anyway, I don't want to get into this whole, but that's kind of what to do here in Apple. I think you sell some puts here, take advantage of this increased volatility, and then do something. Don't just stand there. Do something. Do something that actually is going to take advantage of that. And I think if you sell a little put premium down here on Apple, I think that's a good trade. I wouldn't go out to November. I mean, I wouldn't go out to March yet, only because you're not going to see the expansion and the volatility in March from yesterday's sell-off. And so really you're not taking advantage of the volatility. I mean, if you just look at implied, right, it's actually implied is actually higher. It's always higher in the front month most of the time. It's much, much higher in the February than is March. So it's just better off. So anyway, there's Apple. I don't want to beat a dead horse. You get it. You get the point. Just sell puts. Yes. Yes. All right, so let's flip over. That was kind of the story of the day to me yesterday. Was Apple, because it had such a bad day. Now, on the markets today, looks like we're up pre-market, 20 handles in the ES, hovering around 95, 6,000 ish. And let me just take a look. I have not looked. I'm guilty of being unprepared. Yeah, shocker. I'm guilty of being unprepared today because I slept in. So there you have it. And I don't care. And I ain't getting paid for this. So why should I? So for levels today, I don't know. I don't know. We've had such a wide range. Anytime you have a big move up or down, these gaps will actually expand the range a bit on your pivots. And then you have a day where we didn't do anything, it will consolidate those ranges. But for me, 60, 19, 25 to the upside looks perfect for a short up here today. 60, 19, 25. You can see we got a double candle sort of with a double wick up here. Wow. Anyway, whatever. Whatever happened. Anyway, it's not a supply zone. It's a spot where I want to go short. How about that? It's a pivot. And that's what I use. So to the upside, to the downside, I'd really take a look and focus on 59. I'm not a big fan of S1, but the fact that we kind of came down here yesterday, tagged it, and went higher, I find very interesting, and which makes me interested in this. It's a 59.6350. So I set an alert for 59.6350. Again, the thing with 69.6350, and if you're familiar with these trades, if we meet Ander, which means if we kind of gradually, there's like this methodical kind of chunk down, and we get to this level, it sets up perfectly for a bounce trade. If there's like any kind of like selling momentum that gets generated and you see there's a lot of velocity coming down here, step aside. Because chances are, this number is not on anybody's algo and they'll blow through that like it doesn't even exist. And so, there is a feel for this. So again, you have to be aware, right? It's market awareness. And I do believe if we do drift down here today, preferably at some point, but if we drift down here, then this setup really sets up nicely. If we come down here with some like ferocious veracity, wow, I actually said that and I didn't stutter. Holy crap. I'm on my game today. That's because I had my coffee, right? If we get some huge velocity down here, step aside. I mean, that's the truth with anything. I always did. Time, 30 plus years doing this crap has told me when there's like big violent things going on, get out of the pool, folks, right? Don't swim with that means the sharks are having a feeding frenzy. And like, you know what? I'm just a small fry. I'm out of the pool, man. Go ahead and eat, and then I'll be the sucker fish that comes in afterward and that sits underneath the frickin' shark, and then I'll eat after they're done. Because I know they're full, and then they're not going to eat me. And so that's it today on the ES. So those two spots, 60.1925 and 59.6350. I'm not expecting anything crazy today. I think we stay range bound. Because if you look at the ES on a 4-hour chart, you can get a pretty distinct range of where we've been. And here it is. And this is what it looks like. And we've been stuck between 57.32 and the highs, 61.53. All right. And so, and we are almost smack dab in the middle there. And so there's not a lot of there. Now, how do you take advantage of that? Now, I know there was quite a bit of, I've been kind of like going roundy round on this, but you could do a little iron condor-ish trade on the ES futures. Now, this one's not for everybody, but you've seen what I had marked on you. It's, look, it's got to be real because you saw it on the internet, and it's got to be real because it's on my chart, right? Now, look, these are just on my chart. I'm sure there's 100 other idiots just like me that have it on there. What I don't know is I have no idea. I doubt there's any algorithm or anything else going on out there that has my magic lines on there. But, hey, this is what I see, and so I'm going to try and translate what I see into a trade. And then the trade I see is that let's try and sell some calls above 61.50 and some puts below 57.30. So let's take a look at 57.30. And what's pretty interesting, if we look at March, and you just saw the chart, right? I said 57.30. Here is the expected move. Here it is right here, which is brown, and it goes from 57.50 all the way up to 62.50. So pretty interesting, the fact that we're looking down below what the expected move is. So we'll look at 57.30. And then this buying power is going to be exploded, right? I'm not doing any of this naked. I'm going to cover these. So there's our put on the put side, 57.30, outside the expected move, and our upside, I said 50. I think I meant to say 60, right? Yeah, 61. Yes, 61. What was it? 61.50? Geez, I can't even remember. I'm falling apart here. 61.50. Oh, man. So here's 61.50. Now, the problem with 61.50 is it's still in the expected move. Expected move brings us all the way up to 62.60. Right? Big moves. But I particularly like 62.50. And why am my eyes attracted to 62.50? Is open interest is pretty heavy up there, 9.9K, 18 delta. So I'm going to go and do that one. So we're going to sell that one. So this is what I would consider an expected move strangle. And we're not going to do that because if you look here, the buying power is absolutely insane. So we're going to go and cover it. And we're going to create an iron condor. And we're going to do a 62.60. And now they're 10 wide out there. So got to remember, they're 10 wide out on the call side, out that high. So we have to do a 10 wide on the put side. See, these are actually 5 wide. All right, so we're going to do 10 wide. And there is your trade. Now, I'm surprisingly surprised that this has such a low probability of profit. So this is actually going to be, so all that mental masturbation, and I don't even know if I'm going to do this one. I'm going to have to move these calls out, I think. Where is one standard D? Let me see where one standard deviation is. One standard deviation is out to 64. Wow. 64.25. Youch. And now the problem here, and I don't know if you see it, but once we get up above 64 honey, they're 25 wide up here. So I can't go that high. So I'm going to have to do 64 honey and 63.90. And you can see our probability of profit actually just went over 50%. Now, if we do this to the put side, again, this is all this is how you actually create these trades, folks. Like this is how you do it. You kind of have to like grind through some. You got to grind through a little bit and move stuff around to kind of get something that's in your wheelhouse. And I don't particularly like that one. I'm going to go up to 5,700. I'm still surprised that probability of profit is only 56%. I would expect that to be a lot closer to 60, candidly. And I know if I actually bring it down, it will go up. Let me try 56.50. That's more like it. So we're going to have to go to 40. Let's go to 40. Perfect. Okay, there you go. Yeah, perfect. And I can't even do the curve. So the 56.40, 56.50, I don't like this. I really don't. I'm not liking how this one's shaped up. And so here you actually see what the problem is with futures options. Now, although this kind of looks like this would be in the wheelhouse, 60% probability of profit, absolutely and completely delta neutral, which means the market can go up, down, sideways, as long as it doesn't go above 6,400 or 57, wherever the hell our strike is down there. I can't remember where it is. Wherever it is, 57 or 56.50. As long as it stays in that range, we're good. Problem is like, look, I don't want to use $300 worth of buying power and bring in 90 cents. 97.50. I'm just not in that. No. That is not going to work. So, and I think the problem here, and again, I went through a lot to not get anywhere, but problem here is that this IV rank and volatility just isn't there's just no volatility in here to do anything. So you can see and that translates into options trades. So if we're going to do anything in here, we're going to have to buy options. And I don't like to buy options because I rarely get paid. I don't get paid up front. Like I get getting paid up front. So anyway, all that, and there's no trade. Yes. So there is no options trade in the ES. And then let's move over to the next crown jewel is Microsoft. I'm overall bearish on Microsoft. It actually played out yesterday that it was actually down as well. I think Microsoft's got a pretty good probability to go down to $400. That's kind of how I'm playing it. The problem with Microsoft is that there's really not a ton of volatility in here. There's a lot more today than there was yesterday, but you could see that there are times when volatility in Microsoft does get near 90 or so. And so right now at 42.5, 6.5. Not really setting up for the best short position, which would be to sell some calls. We have to buy options. And so what I had done yesterday, and I may add on, I'm not going to add, it may add on today because it is bouncing a little bit. What did I do? I don't even remember where it is. Where is it? I forgot which one I did. It's definitely in here. There it is. It's, I did the 440, 435. So the 430, 425 put spread in March. Now, why did I do March? Well, I wanted to give myself some time. I wanted to be in the money, right? And for those who trade options, I wanted to be in the money because intrinsic value, right? I didn't want to do something out of the money. And in volatility being low at the time when I did it yesterday, that is usually what you do. So you get intrinsic value. And I may add on to this one. And so the add-on trade here, now that volatility actually seems to be creeping up a little bit, I'm going to take a look at what a call spread would be on the other side. Now, there's not a lot of good price discovery in here this morning, so these quotes are going to suck because if you look here, these are not normally this wide in Microsoft. They're usually a lot tighter. You can see there's like a $2 spread in here, and you can drive a truck through there, and that's post-market pricing, and that's just what they do. If you look up here on the 440, this is probably more normal. You got 1020 on the bid and 1040 on the ask, and then as you go up, and all of this here, if you usually look like at or around the money, that's usually when that's where they usually like widen the strikes, and it's what they do down at the floor just to kind of keep people honest, I guess. From doing like some arbitrage stuff at the money type of options, I guess. Anyway, needless to say, I'm going to be looking at what a call spread is going to do. And now, again, I'd like to see better price discovery on this because it's kind of early in the morning. So you're going to have to see where this opens up. Yeah, this is a mess. There is no way. I would say if I were looking at true numbers, this call spread should bring in about $1.10 if this was true price discovery. That's where it should be. And you can keep me honest on that. Yeah, see, it won't work. It did not work. It should be $1, not $1,100. That should be true price discovery there. And so that's what I'm looking to add on. So I'm going to add this call spread, which is the 430, 435 out in March. It's got 10 negative deltas, so it's like me shorting 10 shares. And why am I doing a little different strategy than I did the circumstances, even in a day, circumstances have changed. When I originally did this, volatility in Microsoft was in the 30s, right? Volatility has gone up 10 handles in one day, right? So volatility is increasing, so it's kind of bringing me into the market where I want to sell options now. So that's why I kind of have to like morph and use a different strategy now because the circumstances change. And still being bearish on Microsoft, that's how. So I have multiple strategies working. I don't just have one. All right, so that's kind of an add-on trade there for Microsoft. And then outside of that, earnings have kind of sucked. Yeah, they all sucked. All the earnings trades, earnings that were coming out this week were not playable at all. One stock that I'm looking at, and I think they have earnings next week, is Las Vegas Sands. The reason I like Las Vegas Sands here is volatility is kind of like banging in this one. And if you look back, volatility definitely bangs on this most of the time. But when it does get a collapse, it collapses when volatility collapses. And it's kind of getting due. And it does have earnings, so you're going to start to see that explode. But I'd like to put something on in here. Problem is, though, is that there really is not a hell of a lot you can do. What I was looking at is I was looking at a possible ratio. And what a ratio trade is, I got this reversed. Ratio trade is that you buy an higher priced option and then sell two deeper out of the money options. And why you do that, again, you're trying to get synthetically short, or you're trying to get synthetically long, giving yourself a little bit of leeway to the downside. Yeah, and there's nothing been in here. That doesn't even, I don't even like that either. That looks like crap. That looks like crap. Wow, that is really bad. Anyway, I do like this one. I just don't know. I haven't really figured out what to do with it, to be honest. I'm not bullish. I'm not bearish in it. I think if you look at the chart, it's been kind of a piece of crap, right? Yeah, it's been a piece of shit. So yeah, it's been a piece of shit, and it's like been getting its arse kicked. I do like selling puts in here, though. I just don't know where to land. So we'll look at that one next week, because I think that will be an earnings trade. Just kind of give a foreshadowing of next week. I will talk about natural gas. Now, natural gas has been, and again, it's the commodity nobody cares about, natural gas. But it's been on a tear. All right, you can see it's literally been, and it hasn't been like a real smooth ride either, right? It's trading, it's doing what natural gas does, and that's, break hearts and minds of anybody who trades it and drive anybody who actually wants to trade natural gas for a living into doing something else. And that's exactly what natural gas has done. But it's done it to the upside because we've had these massive, massive swings up, and then they are just pounding it after these. But more importantly, what's actually stayed bid in natural gas is this volatility rank has been elevated for quite some time. And, it's keeping my interest in natural gas because of that. And I think, there's a number of ways we talked about yesterday, and this is going to be a repeat. I'm going to try it again. I was trying to sell. Now, look, if you go back to the chart and look at natural gas, I think you can really take advantage of this if you sell calls above 480 and sell puts below 280. That's kind of the zone. So let's go look at the options in natural gas. Now, the thing about natural gas, and I'd probably go out to March. I wouldn't use February. Maybe I would use February. It's 39 days left. I'm going to use February. The thing about natural gas and natural gas options is that their margins are relatively tame for a commodity. So it makes it for a really nice, it makes it for a really nice product to trade. And here's 480. So do the 480, 490, and the 480, 270. All right. Now, this, I like this trade. So this is what it is. I don't even know if I can actually even show it on here because I think it's too wide. Is it too wide? No, look at it. It's coming in. It's just, this is wide. So it's the 280. I was trying to put this on yesterday and I didn't get filled. And I was trying to do it for 20 cents. Or 2 cents or whatever it is. It's 20 cents to me. I was trying to do it for 2 cents, bring a $200 credit. So it was the 480, 490, 280, 270 Iron Condor. And yeah, and then what we're doing here is this has nothing to do with where natural gas goes for price. It all has to do with this right here, this volatility. And it is a pure volatility play. It is absolutely, completely delta neutral. You got a 71% probability of profit. All right, you're going to use about $400 worth of buying power. Max profit is $200. Now, don't get spooked out by the max loss here, because the max loss here, and especially what they do with, and now that's to say that could not happen, right? Because anything can happen. But the reason that's priced that way is because they figure that at expiration, so at absolute expiration, when this thing is going to go, your strikes, the price of natural gas falls between your options, and then you actually would realize a loss. So that is what that is calculating. And, look, they always have to disclose the worst case scenario. And that's just what they do. So don't get spooked out by that. If I'm holding on to this for a week, look, I'm looking to do this today. I was trying to do it yesterday. I'm looking to do this today and then be done, right? Next week, by this time, I'm looking to be out of this, right? I'll probably look to take, out of the $200 I bring in, I'm probably looking to make $100, not even $80 off this, flip out and have a nice day. But it's a much cheaper way to play natural gas than dicking around with the commodity. Because if I were to actually just, let's say I just buy natural gas, it's $11K. And I think day trading margin on natural gas is not much better. I think it's only like, I'm pretty sure it's like $5,000 or $6,000 or some bullshit, some crazy, it's like, no way. Now you can do, and I was mentioning yesterday, I never traded this before. And that's the MNG, which is the micro. There is a micro Henry Hub natural gas. I have never traded it. I don't know what the liquidity is like, but, seemingly very attractive from a buying power. It's only $1,100 as opposed to 11,000. I think it's probably, if at that case, it's probably $1.50 or something, a tick. I don't really know what it is. It's probably $1.50 or something like that. $1 something. But much cheaper. But I haven't really looked at the volume and liquidity. I mean, they did trade 6,000 cars, which is, I guess, is okay. Let's face it, natural gas normally doesn't have a ton of volume in it anyway, because it's a big contract. So I think 6,000 cars is actually pretty good for a micro contract. So there are people trading it. I just haven't messed around with it. And if you're going to do those, if you're going to just trade the futures, right, you're not swing trading futures. You're getting in and you're getting the frig out, right? You're getting that in and you're getting the hell out as fast, right? I know I am. I don't swing trade futures. Hell no. Nope, not worth it. I like my heart right where it is in my chest. I don't need it on the top of my skin, blowing up my blood pressure. So anyway, that's natural gas, and it is remaining a bid. Even this piece of shit, UNG, which I can't stand this thing. I can't stand it. Did I tell you I can't stand this? There's kind of no other way in this. And I actually I bought a calendar spread is what I done. I will look at the options though, because they did just add they just added March options to the UNG yesterday. And as you can see from the open interest, there's just been an explosion, right? Look at this. There's nobody trades this product anymore. But so with that being said, I'm going to look at BOIL here. Now I haven't had much good experience trading BOIL. I would say probably the tasty trade way, which is like, selling premium. I've made a couple of bucks being directional in it, like just doing a call spread or doing a put spread. Have not had a good experience with this one as a volatility play. But Look, anything's possible. Maybe my luck's changed. When I see an IV rank of 109, it is a liquid stock. It is relatively liquid. I mean, it does have a good ranking on liquidity. I mean, it's not great, but it does have it's on the high option volume list. I'm going to take a look at it. And if I'm going to do anything in BOIL, and then the first thing that sticks out to me, if I'm looking at February here in BOIL, playing natural gas, is the spreads are large. Markets are wide. So if I'm looking at, let's say, a 55, I'd probably be looking at a 55, somewhere between 55 and 50, right? Because you look at these deltas down here in the put column. I usually like to stay within, so if I'm going to do like a strangle or something, I usually like to stay within 20 deltas on either side. So inside 20 deltas. So 55 is right around. So let's look at the 54. The markets are a little wide in here. I mean, this is like 11 cents. I mean, it's not horrible, but it's they are a little wide. So anyway, I would do like the 54, and I don't see a lot of volume in here either, like open interest. Like this is pretty bad. 17 contracts. But anyway, needless to say, again, this is kind of a mental masturbation exercise because I have not done well in this as far as volatility plays. So that's to the downside. So it's the 54. And then to the upside, we'll look at the comparable 20 delta. And there is none. How do you like that? There literally is there is no 20 delta call. None. Not a one. That is absolutely amazing. That blows my mind. That absolutely blows my mind. So I can't even do a 20 delta call because they do not exist. Do I have to increase this maybe? Is it all? Yeah, but still, yeah, it only goes up to 109. Why 109? Where the hell did they come up with that? So, yeah, so you can't even do a 20 delta. So let's... And there is no bid on the 105, so they just added the 105. There's no open interest, nothing. Wow. Wow. That kind of sucks. That is bad. So we're going to have to do like a 90. I don't even like doing that. Boy, does that suck. All right, so here is a I don't even know if I would do that. You're not going to be able to do February, folks. Let's look at March. Let's look at March real quick on BOIL. Let's see if they have the strikes. No, they don't have them. They don't have them in March either. So we'll stick with February then. Wow. Now I know why I didn't trade this product. That sucks. So it's the 54. And I guess I'm going to have to do the 100 or the 102. We'll do the 102. And so this would be a strangle in here. Would be the 54, and I can't even, it's so wide again, I can't even, there it is. This should actually be, there we go, 54. There we go. 102. Yeah, so you're going to use the margins in here suck. $5,200 worth of buying power. You are, however, now look, now you're talking risk reward here on this. You know, I kind of, my eyes just kind of lit up a little bit. Now you're talking risk reward. I'm going to risk, I'm using $5,200 worth of buying power. I'm bringing in $1,000 on this trade, on this strangle. Delta is showing relatively, like, it's showing bearish, and that's because I can't really increase the call side to make it truly delta neutral. But what's blowing out my eyes here is the fact that, look, I'm bringing in $1,000. I'm using 5,000. Do the math on the risk reward. That's pretty, I don't know. And then a probability of profit of 76%. And then also I'm going to get this huge theta number, right? And for those of you familiar with theta, when you're selling options, right? Theta is your friend. The higher, the better, which means the burn rate that you're going to get on that option premium. Yeah. So, I mean, that, if it wasn't for the margin, I would be all over this. And so let's see if we can actually let's see if we can actually see, I can't even really cover. How can I cover it? I have to cover it with like a 109. Well, what the fuck is 109? Who came up with that? Where does that come? I'm sure that has something to do with the share price. 109. I'm still like, why is it 109? 109. Oh my God. And then we'd have to do 7 wide on this side, right? So that brings us what, to 48? 1, 2, 3, 4, 5, 6, 7, 47. I like this trade. As crazy as this is, I kind of like this trade. So we have and then I'm looking too, is the bid on this is actually at 72.10. So this is going to be a mess when this opens. None of this is actually going to jive. So you're going to have to move this around. So anyway, the 54, the 54.47, the 102, 109 brings in $200. You're going to use $400 worth of buying power, and you got a 61% probability of profit. I like this trade. Now, I don't think any of this is actually going to be, I think this is all going to be a mess when this opens, only because this is pre-market, and it looks like this thing is down about $4 or $5. So this is going to be all different. And we might not even be at this strikes because of the deltas and all the other stuff. That's why I kind of hate doing stuff pre-market. But anyway, take a look at Boyle, because I think there is something that you can do in here and take advantage of this volatility. And it just showed up on the top of the list today, so that's why I was even pointing it out. Let's talk, last but not least, Palantir. Volatility continues to stay bid in here. I think you can do a really, really do yourself a lot of justice in here by selling premium. It's actually worked out great for me over the last, not just owning the stock, but selling premium against this. To me, you could easily sell puts in here on drawdowns. I think, and you're going to be okay. They do have earnings coming out on February 3rd. So be aware of that. I kind of like the March expiry. I'm kind of loaded up in February too much. I kind of like going to March. And if you do a March, I mean, just put this in perspective. If you do a March like 50, 100, Iron Condor, 45. 78% probability of profit. Completely delta neutral. You could probably do this trade today and probably do it for 90 cents. You're going to use $400 worth of buying power. And to me, really nice, like middle of the road trade that you can kind of take advantage of this high volatility and just be kind of right in the middle of the range. Here's the expected move. Look, I'm not one of these people that look. I got a decent amount of this stock. I've owned a lot of it at pretty cheap. But by no means do I think, do I just sit on that and say, oh yeah, it's going to moon. I'm not that stupid. Everything has its day where it has to pay back what it gained. But more importantly, if you have stock in this, I think you could feasibly really like sell calls up here over 100. You're getting a really nice premium for them. So if you have shares, you can sell calls. And I think selling the 100 call in March is actually not a bad play. And now look, it could get blown out, right? So say it goes to 120, and then it's like, you know what? It is what it is, right? I mean, shit happens. So then sell puts. So if your call gets blown out, then start selling puts. That's it. It's simple. Wash, spin, rinse, repeat. So I definitely think you could sell some calls in here. I think you do anything, really. It's a very liquid stock. I think there is kind of a floor. I don't usually say that. I think there is a floor around $55, 55, even 60 if you want to get aggressive. But I do think there is kind of a floor, and you're staying right on the expected move at 55, even selling a 55 put if you want to get long. And that's that. So that's all I got today. I'm not really going to be doing much, but managing kind of what I have. Natural gas still under pressure today as well. ES is up 36 handles. I don't think is there any economic uselessness going on today? No. Building permits, housing starts, capacity utilization, and they got the rig counts for crude oil, and then we're off Monday. So that's another thing I didn't even mention. Look, if you're going to sell options today, it's a great day because you got a 3-day weekend, so you get 3 days of theta burn built in, right? Because the market's closed for Monday. So, there's something else to consider. I don't know what the hell that. So anyway, that's all I got. I don't know what's going on with this thing. It's kind of unable to verify. What is it trying to do? What is this doing? I wonder why they want to ban this app. What is going on with this? They wanted to verify me? What's going on with this app? No wonder why they want to ban this thing. So anyway, that's it. I'm going to look and see here. I got another minute or so. And let's talk about, you got to talk about Tesla. You can't not trade if you don't talk about Tesla. Tesla has stayed bid in volatility for quite some time, still in the 70s. Took a hit yesterday, though. They definitely killed premium in here yesterday. Pretty good. But, look, Tesla has earnings at the end of January. But this is another one, I think, if you want to trade it, you can sell. I think you can safely sell. Famous last words. Guy told me on the internet I could definitely do it. I think you can sell calls over 500 and sell puts under 350, and I think you're good. Famous last words. 350 brings us down to here. So if I did like a 350, let's see if I did a baby one, and then I did like the 500. 505. Not great probability of profit on these, but again, you're sticking in the zone, and I think you can safely sell options outside this area. And obviously, if you want to increase that probability of profit, this is pretty much a 50-50 shot. But if you want to increase that, just pull out the strikes, right? Just go out wider on the call side. On this side, right? Go out to like maybe the 520, and then same thing over here. Go to like the 530 or the 520 or the 530, the 320 or the 325. But I'm just trying to show you that, like in this range, I think you're fairly safe, especially with the way Tesla has traded. It's going to take a lot more. It's going to take a lot of momentum for this thing to really like bust through there. And I think as well to the downside, I think it's going to take a lot of like negativeness and a lot of heavy selling. And I just don't think they can sell it fast enough if they had to. I think it's so widely held. And the same thing with Apple. I think what you saw yesterday in Apple, I think you've seen the big players getting out of Apple, or at least reducing their exposure to it. And could it happen to Tesla? Sure, but I don't know if it happens to that extreme where it goes down below 350. So anyway, I even have a little note here. And whether it's February or March, like I said, I'm looking at March now. And so that's kind of where I'm at with that. And that's it. And then the big thing is going to be next week is when really the better earnings plays are going to be out there. Let's just take a look at that. And then I'm going to wrap it up because I'm tired. Doing this sucks. I don't know how to help people do this all day and sit there and yap and go burp, 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 burp. I don't know how the hell these guys do it. I really don't. Well, I guess they have to, right? Because they don't make many trading, so they have to get online and bullshit people and make it look like they're trading. So that's why they do it. Anyway, so next week we got 3M. UAL, I think next week is going to be a big one. And not that I think it's going to be big one way or the other. This thing has stayed elevated for volatility. So I think this one's going to be a good one next week. So I'm actually looking forward to that. I'm already in some stuff in UAL, getting my ass kicked a little bit because I'm actually short UAL. Yeah, I didn't expect this thing. This thing's been on a tear. Freaking United Airlines, right? I mean, who would have known that this thing would have just tore the hell up? For a shitty airline, right, that pisses its customers off. It's awesome. But it just goes to show you, nobody knows shit in the market. So anyway, UAL will be a good one next week, I think, to do. Halliburton will probably be a decent one. That's always a decent one to trade because, it's usually it's usually a good one, and that's... And then Las Vegas Sands, which I said earlier. So we can't do those now, though. We have to do those as earnings trades. And, so that's it. That's all I got. I'm actually going to wrap it up now. But have a good one, and I will be back on Tuesday. Enjoy the long weekend.